Everyone knows that person that may have a really strong negative opinion about the worst crash or the worst recession is coming. Hey, Kris Kennedy here. Today I'm going to talk about the next real estate crash. Particularly, how do we tell if one is coming and how do we not tell? After I describe how do we not tell first, I'll talk about 7 signs that we can look at to determine if a real estate market crash is coming. So how do we not tell? Taking someone's strong opinion that has no research base is one specific way we do not tell. Everyone knows that person that may have a really strong negative opinion about the worst crash or the worst recession is coming and save all your money but don't buy or spend anything. That is just an opinion. They usually have nothing to base that off of. That is not a good, positive way to look at how the real estate market economy is doing. The second way that we do not tell is listening to real estate agents in their personal business. This one is a particular favorite of mine because I'm in the business and I hear it all the time. When you ask a real estate agent how the market's doing and they say, "Oh, the market's doing great. I've been very busy this month." Or they say, "I haven't done that much business lately. The market's slowing down." Well, unless you've asked thousands of agents and they all say the same thing, that's probably not a good determining factor of how the real estate market is doing. One real estate agent's personal business is not an accurate snapshot of the real estate economy, and we should not use that to determine if the real estate market is going into a crash or not. Could you imagine if CoreLogic or the biggest real estate research companies in the world got their data by calling and said, "Hey Kris, were you busy this month?" Yeah, a little bit." "Oh, okay, so the market's going up. Let me write that and put it in all of the newspaper articles out there in the world." That doesn't make much sense, so we don't want to use that as a determining factor of how the real estate market is doing. So how do we measure if the next real estate market crash is coming? There are 7 easy signs that I'm going to share with you right now that we can look at to see how it's doing. The first one is the number of transactions. If that starts going down, if basically the number of homes that are selling are decreasing, that could be a sign that we're in a recession. The second one, sales prices start going down. If the sale price averages start decreasing, that could be a sign that we're heading into a recession. Number 3, the sales price per square foot. A little bit more specific, but if on average those sale prices per square foot start decreasing, that could be a sign we're heading into a recession. Number 4, the sale price to list price ratio. A little bit more tricky to find, but this is basically the discount from the original asking price to the sale price. $1 million house for sale, sells for $900,000, that's a 10% discount. If that number starts decreasing, then that could be a sign we're in a recession. Number 6, the number of bank mediated sales or distressed sales. If that number of homes that are distressed start increasing, then that could be a sign we're in a recession. And lastly, number 7 is the inventory. If inventory starts increasing, basic supply and demand, it will slow things down, and that is a sign that we're in a recession. In my next video, because I work in Tampa, I'm going to talk about what the Tampa market is like from the recession days, 2008, 2009, into now, 2018, Q2, Q3, and compare what it was like then to now to look at, are we heading into a recession or are we there now? So be sure to watch that video if you're at all interested in the Tampa area or Hillsborough County. If you found this video helpful, please give me some comments or share this with some friends that you think would find it interesting. And thank you again for following. I'll see you guys next time.